a strong price, another small up move in the price of gold. Silver, on the other hand, not only didn't get killed today, which it has been, right? When we've gotten better than expected jobs numbers, they crushed silver, 50 cents, 75 cents, $1. Silver rose 3.2% on the week, and it closed the week above $32.12. This is only the second time we've had a close above 32 over the past 11 years. So silver, as I've been saying, is looking very strong. And I think we're going to have a major, move up in silver and gold.
The Federal Reserve recently reduced interest rates for the first time since 2020, which has garnered widespread approval among financial analysts and sparked optimism, particularly among households seeking credit. The Fed's primary responsibility is to manage the U.S. economy by maintaining stable inflation and low unemployment, utilizing its ability to influence interest rates and control the money supply to achieve these objectives. Balancing these two goals, however, is often challenging. A slower economy typically helps contain inflation, but can lead to higher unemployment. Conversely, rapid economic growth tends to reduce unemployment, yet may fuel inflation. Depending on economic conditions, the Federal Reserve often prioritizes one of these objectives over the other. The prevalent narrative suggests that inflation is under control, a sentiment supported by the Fed's statements. Nevertheless, a well-known economist, Peter Schiff, expresses skepticism regarding this perspective. He suggests that the Fed may prioritize managing consumer perceptions over presenting a clear picture of inflationary trends. By downplaying inflation risks, the Fed might attempt to temper inflationary expectations, even as evidence suggests inflation could rise again. Amid these macroeconomic dynamics, gold remained resilient throughout the week, closing at approximately $2,650 per ounce. Historically, such economic conditions might have led to a significant decline in gold prices, yet gold held its ground. Many analysts believe that gold could continue its upward trajectory, with some forecasting a potential rise to $3,000 per ounce by the year's end. Silver also exhibited strong performance, rising 3.2% for the week and closing above $32 per ounce, a level it has only reached twice in the past 11 years. With inflationary pressures resurfacing, despite the Federal Reserve's efforts to contain them, investors seek assets that traditionally preserve wealth during turbulent economic periods. Silver's dual role as an industrial commodity and a store of value makes it particularly attractive in such a climate. We will present clips from Peter Schiff's interview, but before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Most people that I listen to, if you just turn on the financial news, they've all bought the idea that inflation is over, that inflation is no longer a threat, that the Fed has won. And the only real evidence that they have to point to is the Fed. Well, the Fed says that it's not a concern. The Fed, the Fed claims that it's going back down to 2%. Well, who cares what they claim? They don't have a good track record anyway, but they could just as easily be lying. In fact, they've admitted that they believe that the most important aspect of inflation is consumer expectations, right? If people expect inflation, they'll get inflation, as if expectations are the driver. But if that's what you actually believe, then what do you want to do to fight inflation? Well, you want to lie to the public and tell them there's nothing to worry about. Hey, there's no inflation. We got it licked. And if the public believes it, well, then maybe there'll be no inflation. So if you actually believe that expectations are why you have inflation and you're a central banker, what do you want to do? You want to try to clamp down on those expectations. Well, how do you get the public not to worry about inflation? Well, tell them not to worry. Tell them that you got it licked, right? That inflation is going back down to 2%, and try to influence those expectations. I mean, the last thing that you would do if you're a central banker and you really think that expectations are what drives inflation, why would you come out and say, yeah, we expect a lot of inflation in the future, right? Because that's going to create a self-fulfilling prophecy. People are going to say, oh my God, the Fed is telling us there's going to be a lot of inflation. I better go out there and spend a bunch of money. I better demand a pay hike. I better raise prices, right? they are worried that they're going to impact the way people behave based on what they say. So to try to point to what the Fed says as a basis for believing anything about inflation coming down is ridiculous. All the anecdotal evidence would suggest that inflation is bottomed and it's headed back up. But nobody wants to admit that. Now, gold, on the other hand, despite the 2% rise in the dollar, despite today's better than expected jobs report, gold was still positive on the week. In fact, it was only down about $5 today. Right? Normally, when you get a day, I'm talking about last year or two, when you get a day where the jobs number is better than expected, gold gets hammered. $30, $40, $50, which isn't even as big a percentage move when you're talking about $2,600 gold. But gold barely went down. I mean, they got it down maybe $20 or so on the absolute low, but it was there just very briefly. Then it was down maybe $12, $14, and it clawed its way back, but it was barely down, and it closed at 2,650. So a strong price. Another small up move in the price of gold. Silver, on the other hand, not only didn't get killed today, which it has been, right? When we've gotten better than expected jobs numbers, they crush silver, 50 cents, 75 cents, $1. Look back at some of these other numbers that, that came out stronger than expected. Silver got killed. Silver was up today. Silver rose 3.2% on the week, and it closed the week above $32.12. This is only the second time we've had a close above 32 over the past 11 years. So silver, as I've been saying, is looking very strong.
While Fed Chair Jay Powell didn't provide a clear plan for the future, he indicated that interest rate cuts might be coming, potentially totaling a full percentage point by the end of 2025. For those considering borrowing, the lowest interest rates are likely still ahead. Investor sentiment in the financial markets is becoming increasingly optimistic about the Fed's ability to implement these rate cuts soon, regardless of the latest job figures. This confidence arises from the understanding that the Fed focuses more on the overall economic landscape than just recent employment data, which may not fully reflect a strong job market. This positive outlook was evident in the stock market, where major indices saw significant gains. The Dow Jones Industrial Average rose about 350 points, resulting in a 0.5% weekly gain. This increase reflects a shift among investors regarding the economic outlook and how the Fed might respond to current market conditions. Similarly, the S&P 500 and Nasdaq also performed well, particularly the Nasdaq, which saw strong trading activity in the tech sector. As interest rates are expected to decrease, borrowing conditions may become more favorable, potentially stimulating economic activity in the coming months.
It was bad news is good news. Well, now, good news is good news as far as the market is concerned, because the market is no longer worried about the Fed not cutting rates. The Fed is going to cut rates. I think the market understands this. The rate cuts are coming regardless of these job numbers. So we don't need bad jobs numbers to keep the rate cuts coming. And so I think the markets understand that the Fed is really, on autopilot, despite the fact that it claims it's data dependent. I think the markets are seeing through this, and they know that we're going to get more cuts. And also, they probably realize that, they know that these numbers are probably going to get revised, and they probably don't put as much weight into this so-called booming economy. And again, it's not really booming. It's not a lot of jobs that were created anyway, even superficially. But the markets rallied. And in fact, all the major stock markets had a positive day. They were going to have a negative week. This was going to be the first week of the fourth quarter. And the indexes were all in negative territory until today. So today, everything got bailed out. The Dow was up about 350 points. And that was good for about a 0.5% rise on the week. S&P not up quite as much. It eked out a 0.2% gain on the week. Nasdaq up 0.3%. Again, all that today. I think the Nasdaq was up 1.2% today. So prior to today, it was negative. This report caused the market to rally. The only major index that was down was the Russell 2000. That was down 0.2. But what was really interesting to me was a few of the other markets. Oil rose 9.5%, almost 10% on the week. And I was talking on this podcast about how cheap oil was and how I didn't expect it to stay cheap. And I pointed out in terms of gold, it was basically a record low. And so oil prices ended up about $74.50. They closed last week about $68. So I think we've broken out of that downtrend. I mean, part of that had to do with hostilities with Israel and Iran and the potential for an escalation there. That may have just been the catalyst to break the downtrend. But now that that little trend is broken, to me, it looks like oil prices are headed higher from here, not lower. And again, that is symptomatic of inflation, because the big driver for the drop in headline CPI was the big drop in oil prices.
There is no doubt that this month brings a strong expectation for gold to continue its upward trend, with forecasts suggesting prices could reach between $2,800 and $3,000 per ounce. This positive outlook is supported by gold's significant increase since the beginning of the year. Likewise, silver will likely benefit from similar market dynamics, reflecting a growing demand that could increase its prices in the months ahead. Share your thoughts on Peter's analysis in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.